Hello and welcome to FinTech Focus TV. My name is Ian Bailey and I'm joined today by Ion Fratiloiu from Finkr. Hello Ion.
Hi Ian, thank you for having me.
You're very welcome. Look, great to have you in the studio. Please just introduce yourself and Finkr. Tell us what it's all about.
Yes, Finkr is a next-gen consulting business which helps fintech companies as well as lenders and technology companies scale up or come into the UK market. We also have another arm of the business which focuses on capital raising, both on the debt and equity side. So for example, if fintechs from abroad are looking to raise capital, whether they're a lender and they need a blend of equity and debt, we support them in placing in front of the right investors, but also getting them investor ready in that journey as well. So we bring expertise from the consulting arm where we've seen businesses struggle creating the right business model, and we make sure that they are supported in raising the right funds.
Hugely useful and very important to a lot of people. I mean, what's your background? So you're CEO, right?
I'm the CEO and founder, yes. My career started in banking and then I moved into equity capital markets, after which I worked for large fintech providers such as Fiserv, Thought Machine, more in the banking technology space, and then I launched into market SME lenders in the UK and the Netherlands as a chief commercial officer. And the idea of Finkr sort of stemmed from seeing companies struggle in positioning the right strategy, the right products and technology as well. So all these three pillars were quite siloed, and often companies raise money but they don't have an idea of what the product should look like, and then how do you support a product that the customer desires it without having the right technology in that customer journey. So from there, last year, I started Finkr thinking we're going to solve this problem, and so far it's received pretty positive feedback from the market, especially with the clients that we have.
I can imagine, and so the classic working in the space, seeing the problem and joining it together and coming and bringing a solution. Yeah, fantastic. So you've been going for a year now?
Almost a year, yeah.
Very good.
So it started independently and then building the team across. So we have, as I said earlier, three pillars. So in the strategy piece, we work with seasoned experts that come with backgrounds from McKinsey, Bain, EY, who can come in and leverage part of their expertise across a project. And then the same, we apply the same structure across product and technology, whether it's we need to research the products and structure the features on how it needs to be built. We have CPO level individuals or people that have built products, financial products before. They come in and leverage their knowledge and are able to support the customer in choosing the right proposition in the market.
Interesting, yeah. And you say so two sides of the business, obviously the consulting side of the business and then the capital raising side of the business as well. Certainly on that consulting side of the business, probably fair to say that's a pretty big market right now, and there's quite a lot of players in there. What's the sort of USP, or what's the difference that Finkr would bring?
It's interesting, when we started working with this partner from McKinsey, who's very specialized on strategy, said, what's your strategy? How do you differentiate? How are you going to compete? What we bring in as a differentiator, apart from the methodologies that are established in the strategy consulting space, it's more the lived through projects that we all have been part of, whether it's from our client base that we're supporting today or whether it's a technology company. We're able to bring expertise from the roles that are actually shaping the strategy, product and technology of those organizations. So we look at that and we're able to provide direct feedback to our customers on how to shape their proposition, rather than having to go into research mode, finding the right resources, consultancies having to sell lots of bodies in order to be able to generate the revenue. We're much quicker in that. So when we look at a client, for example, that comes from the international market into the UK, and they want to understand how to best sell to their customers, we can do a complete assessment of their business and a strategy design within 20 to 30 days. And that's just because we bring the experts that know their business or have worked for a competitor before.
Yeah. Fascinating. And I mean, is there a sweet spot, I guess, for you in terms of the type of client that you are absolutely perfectly geared up to be helping?
Yeah, so I think we were able to support lending technology companies, as well as lenders, both in the consumer and SME space.
Yeah.
So I've been part previously in shaping banking as a service propositions and taking those to market, and that is where the sort of cohort of our experts kind of are comfortable with.
Yeah.
So therefore we're focusing primarily on those two segments.
Yeah, very good. So it sounds a depth of experience in that space, and I think incredibly useful advice as well for people in that area. Then tell us a bit more about the capital raising side of the business.
I like that business more. I think it's more fun.
Okay.
It's more complicated. That's why I think I'm more attracted to it. But it really paves the opportunity to a client to either raise funding in order to afford consulting, or the other way around, whereby they need to prepare themselves in order to go to market in the best possible way. So currently we're working with several companies across payments, SME lending, insurtech, who are raising anywhere between 2 to 10 million pounds in equity. Some of them are also raising 20 plus million in debt. So my co-founder, who couldn't be here today, on the venture side, she has a very strong background. Her name is Catherine Herbert, has a very strong background on the debt capital market side. My equity background complements that, so we decided to join forces. But it's always interesting to see companies that have been raising before, whether it's through friends and family, angel, pre-seed or seed, and they come to market to raise their first Series A, and they think they know what's required, and when we look at their data room, we immediately spot areas of improvement, and they're shocked that they haven't thought about certain things before coming to market, and it's taking them slightly longer to be prepared. What we do, we come in, we assess all of that information, and we start advising them on how the business model should look like, how the financial forecast should be shaped, the distribution routes for their products. On top of that as well, how they should be coached in front of an investor.
Wow, okay.
So we do quite a bit of services in there, and then we partner with a multitude of organizations, especially if they were to need a branding redesign or legal advice or financial modeling from actual investment advisors. And we try to bring all of the services together for that journey. Invaluable.
I can imagine, I can understand why that's your favourite part of the business, because we speak to so many people, and certainly at that embryonic startup stage where funding is everything, right? Of course you need great products and people and so on, but that ever elusive funding can be just so challenging. So you're really coming in and just sharpening everything. It's not pitch deck and all of that.
No. It's not just pitch deck. When we work with clients, we have a process. We actually do a bit of pro bono work in assessing their business and their data room for free before we even engage signing with them, because most of our relationships on the capital raising side are very, very much people that we know directly from the past. So we don't go and brunch massively on LinkedIn to people, hey, I have a deal, are you interested to look at the pitch deck? We actually probably know about 10 to 15 equity investors that would take deals, especially in our target focus area of clients, and in making sure that when we put them in front of our contacts, they look in the best shape possible. So it's kind of a win-win, because we get to know who we're working with before we actually commit to sign any agreement and be tied up to something that might or might not work.
So you have the access to the investors, and then the ability to prep essentially the businesses, and that's pretty cool.
When we work with the people that we know, and these are investors that we have access to via WhatsApp.
Personal connection.
Exactly. We know exactly the investment criteria. So every investor that works with us sends us immediately their criteria, the information that's required, and then we match that to what the companies in their focus are not. So we really try to make it very relationship driven and as targeted as possible.
I'd say that's pretty compelling. Yeah, that sounds pretty good. And look, I think I'd love to get your thoughts on that market at the moment, because I think anybody watching this and the time this goes out, that maybe the investment market hasn't been quite as lively as some would have liked it to be. I mean, what's your view on, I guess, where the market's been and probably more interestingly where it's going?
Certainly over the last 18 to 24 months, the market has seen a decline in equity raisings, including companies going to the stock market for buy IPOs, and I would say in the last 4 to 6 months, especially when we also started with Finkr Ventures, there has been more positive uptake. There is a significant amount of scrutiny, so investors are not valuating companies as they used to do before. When they start the due diligence and the investment process, on purpose, they're delaying the transfer of funds just so that they can see whether a business can stick to their financial forecasts. So if you're saying you're going to break even in 2 months and you started like talking with the investor today, they'll probably give you money in 4 months so that they can actually prove whether you're
testing you.
It is absolutely like that.
Wow.
The due diligence is more intense. So there are investors that go through 200-300 questions with our clients, and that's why we try to alleviate as much as possible from that process. So just to add other things that we do with some investors, because we have a network of experts, the investor would need due diligence on a commercial activity or a tech audit or any other side of that business. So we can place our experts in supporting the investor in getting that information, because perhaps investors don't have the right expertise in-house. They leverage in-market people.
Great, so you're helping both sides. You're helping both sides.
Yeah.
Okay.
Yeah.
Well played.
Yeah. So just to add what's happening more, I think of course there is a hype on AI, and everyone, if they have like some automation added to their pitch deck, then the investment is almost there.
Okay. Right.
There is interest certainly in RegTech. Payments, there are new technologies that are being built which will replace the payment rails and payment switches, which get a lot of attention because that market hasn't been tapped in for at least 30 years in terms of new technology development. And then there's cloud-native core banking technology as well, which is a bit of my background, which still gets the focus from the investment community, especially funds that are created in large banking organizations. They're investing in those so that they can acquire them as a product for themselves.
Interesting.
So those are some areas of activity, but also the scrutiny element as well from the investors.
Yeah, that's fascinating to hear that they say they're almost stress testing what you've told them to see whether that's true or not. You touched on some technologies in there, and AI specifically. You said you're talking about automation. You're pretty much guaranteed some funding right now. But I think it's one of those things that there's a huge swell of interest and talking about what AI, how it's going to be implemented and how it's going to be used and so on. I'd love to get your thoughts on
I can give you some examples. I think in financial services, most of the adoption on AI has been on the servicing side. So robo-advice, how do you assess data from a predictive analytics perspective. So if you're looking at a lender, you get better insights whether your borrower will default or not. And there's actually like a lot more places where AI within that journey of a lender can be applied. However, there are significant redundancies at the moment for a lot of financial institutions because the underlying tech is still built on a monolithic architecture, which is removing the whole concept of AI, of having vast amounts of data and utilizing real-time information. So if you are a lender and you have, or a bank and you have a savings product and a mortgage and a loans book, and you're trying to like see how your customer is moving across those products and extract the data, if you still run on a fairly old piece of technology, then it'll become very, very difficult to actually have an understanding of your customer behavior. So then it kind of like contradicts a little bit this entire hype, especially in financial services, of AI being adopted. There's only fractional bits where it can work today. Banks still need to change the underlying tech. EY gave an analysis because we're working for a client right now coming in the UK, and we're looking what's your best target suite. So UI made an analysis that 60% of one of their surveys respondents, which were financial institutions, said that in the next year they were going to invest their IT budget in modernizing the back-end infrastructure, exactly, and that makes you think, right, so there is a bit of a timeline to acquire new technology, install it, decommission the old one, move your new customers to the old customers to the new technology, and then start thinking on how can you apply AI. So going back to a lender, there are 4 areas, right? You have the onboarding, you have the decisioning, you have the monitoring, and the servicing.
Yep.
There are fintechs out there that can support each stage with AI components, whether you're tapping into alternative data and it can allow you to automate your credit scoring and accept more customers than you would before, but they need to fix the first phase first.
Yeah, I understand. We just find it fascinating. Obviously, working in the recruitment industry as we do, we see it. It's talked about, and for a change in job titles as well. I had someone very confidently the other day telling me that software engineers aren't going to exist in 3 years' time, or languages aren't going to exist in 3 years' time, which I think maybe a little bit extreme, but I think it is fascinating as to what that can do. But as you say, until that underlying infrastructure is there to be able to facilitate the use, we're probably not going. Would you say we're not going to see much change immediately, or what do you see as a sort of timeline?
There is an significant adoption of cloud backend technologies right now.
Okay.
So large tier 1 banks in the UK, the US, and across Europe are adopting this. So essentially, the new propositions they are designing, they can bolt on AI tools onto it. That change, of course, is very minimal at the moment. When you're looking at a bank to change their backend infrastructure, they're not going to go for full migration, because that's going to take at least 5 to 7 or 8 years.
Significant.
They're going to do a
marginal
marginal approach or greenfield approach, whereby they acquire new customers and then gradually migrate the old to the new. So I think in the next 2-3 years we're going to see more of those, and then the AI applicability will be more strong.
Yeah, very interesting. And I mean, look, that's on the sort of technology side of things. Human capital in your world is very important as well. And the sort of, again, we've got some fairly strong opinions on sort of the hiring market and where it's been, say, over the last sort of 12 to 18 months, but also where we see it going. What are your thoughts on that space?
It's really interesting, because we were talking earlier before we started, the clients that we advise on, whether they're overseas or whether they're in the UK, they've had to go through this painful work of decommissioning really good talent, and they realize now that the job still needs to be done, but they can't afford to hire people full time. So often when we advise on the consulting side a business on how to approach the market, how to structure their products, they want someone to do the execution, and they very much prefer to work on a fractional basis with an expert from the industry that can start straight away, understand their business proposition, doesn't require much training, and is there to test the water of the proposed strategy for at least 3 to 6 months. That's more of a, let's say, adoption of human capital in today's format. I think ultimately, once the investment sort of picks up a little bit into these tech organizations, I think, back to the point, the job still needs to be done. Whether it's positioned slightly different or anything like that, the talent would probably be going back to those organizations. As you said, maybe in different job titles, but
it's a fascinating space. And you say, with all the very best technology and innovation and infrastructure and the whole thing, you still need the right people in the right seats at the right time to be able to execute on that as well. Fascinating stuff. I think you must be incredibly well placed, certainly seeing, say, on the new business and the capital raising side of things, and also working on the more consulting side of things. Like, I mean, it's a big question, but what do you see next in the market? What's the next big thing? What's coming up?
I mean, my vision, and I think it's going in that direction, especially on how financial institutions are able to really change their technology. There has been and still is, and now the uptake of zero code,
low code,
no code phenomenon is taking off. The vision is, if you want to create a bank or a financial institution and you need the technology and you need the products, technology players, multiple fintech players should have an integrated ecosystem already, so that if there are applications today, there's one called builder.ai, you drag and drop the tools that you need in order to build your mobile app. If you can drag and drop your anti-money laundering system, your payment system, your core banking system, your digital onboarding, your general ledger, and then everything is integrated. That's, I think, $1 million business. So maybe we need to set up a startup for that.
Interesting. Watch this space. Yeah. Okay.
That's what I believe it would become of this.
I love this industry so much. Just that innovation and what's coming up next, and you know where it comes from, but the impact it has on real people's lives as well. It's wonderful.
There's also a challenge to the fintech market as a whole, to be fair. And if you're looking at the tech giants and what they're doing in order to tap into this sector, so I can give you a few examples. I was last autumn at Google Next. It's a large event. They have it in the US and London, and they announced that they launched their own anti-money laundering and fraud detection engine. It is a tool which a lot of players in the market, fintech players, provide banks with, but Google has us trapped at the fingertips, right? Then you have Apple acquiring this UK organization a year or so ago called Credit Kudos, to allow people to basically do payment transfers from a phone to a phone rather than having to put it through a proper payment rail or a card. Visa is adopting a lot of buying actually a lot of technology players. Ting for open banking, Pismo for more US payments. It's becoming like a massive hub for crypto processing as well. So there are a lot of like these tech giants that are actually tapping into the fintech sector and are able to take market share because of their size. I mean, if you look, for example, at Amazon today, if you are a user, you can pay for a product in five installments without applying for credit, without going through a credit application, which removes the need of, I don't need to go to a reference agency, I don't need to pay data for that, I don't need to install technology to do the decisioning, I don't need to do the servicing. Everything is there, and the only factors that they observe at you is just your purchasing behavior, credit card, and address. So there are some things which, and it's surprising because I mentioned it to industry leaders, and they're like, I didn't know of this. Like it is slowly picking up. So that could be, again, something to challenge the fintech market in the coming years.
Fascinating. Ion, honestly, I could sit and talk to you all day about this. You obviously know your stuff. Look, I guess just finally, as almost sort of call to action, how do people find you? Where are you?
We're everywhere.
Okay, as you should be.
So our website is finkr.co.uk, and we're present in the socials as well. I think the best, you will probably see me at multiple industry events across UK, the Nordics as well, and coming up into the Middle East as well.
Very good.
Yeah.
Very good. Ion, thank you so much for your time. It's been a real pleasure. Thank you very much for watching.
Thank you very much. Thank you.